Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend. Ira Epstein of Linn & Associates with your financial market wrap-up for this weekend ending on Friday, the 2nd of June, 2017. So the markets are all finished now. Look at these new all-time high closes. Even the gold and the silver took off to the upside. And I can tell you in the last quotes of the day, the gold was near the highs. The silver was about 1754. You were down to the 9660 area in the dollar index. Settlement prices in a lot of these markets are determined much earlier. In the metal markets, it's 12:30 Central Daylight Time. In the currencies, most of them, that is determined at 2:30 in the afternoon. And in the stock indices, the settlement is determined at 3:15, but they trade to 4 o'clock. What can I tell you? Then we take a look at the energy markets, and they're all still under pressure. And that is because the market believes that by the U.S. leaving the Paris Climate Accord, that suddenly U.S. producers are going to see that as a green light to go even further, no pollution controls. That is so wrong. I mean, the U.S. is not changing what it does in pollution. Everything I read points to that. Secretary Tillerson came out today, made that ultra clear. We just don't believe in the accord. We don't think that it's fair as Americans under the president's thinking that China, India, others aren't paying their fair shares. Let them figure it out by 2020, how they'll come up with billions. I'm talking $100 billion. Let them do it without the U.S. So in looking at this right now, the stock market nonstop, this week I was on a bunch of different TV stations from Bloomberg to Fox, Sky Business, and they were all asking, what did I think? And the big issue was in the summertime, are we going to see the markets nosedive, things like that? I said, no, I think traders don't have the same focus they do, but remember, come July, you're going to lose Congress for their vacation. What gets done is between now and then, and it's probably no more than you're seeing at this point. If there's a surprise, it'll be bullish, not bearish, because something will get done. Nobody expects the Trump agenda at this point, apparently, to get an awful lot done because they get stymied every time they try to do it. That doesn't mean what they're trying to do is always right either. Do not put me in that political arena. What we have in the NASDAQ monthly is just a continuing run to the upside. The tech stocks are on fire. You hear about interest rates. I don't know if you're aware of it. You finished today on the 30-year mortgage rate at 3.69%. That's near the lows of the year. We were supposed to be getting worried that interest rates were going higher. Watch the bonds and the notes. You hear me say that on my daily updates because they are really a better indicator than the stock market and where real rates are going. And this is the curve flattening. The Fed raises the rates for the short term, but the long term just collapsing still and not taking off. A lot of people probably buying homes as these rates come like that. But you can see this run up here. This is still the FANG stocks, which are the Facebook, the Apple, of course, the Netflix, and Google. And they just keep carrying these markets to higher prices. The NASDAQ is the poster child, as I've pointed out to you, of this bull market. You can see how powerful it is. The swing lines remain with higher lows, higher highs. Market gives you very few opportunities to get in. One of them occurred a week ago when the market, not this past week, prior to that, this ended on May 19th. You had an outside week down. When you take out that high, as you know what I call that is a bear trap, and the market took off again to the upside. I often watch these outside days. What about moving averages? Well, you're over the 18-week, you're over the 100-week. What about Bollinger Bands? The market is riding this upper Bollinger Band. It gets over it, it pulls back slightly under it, and that's all in part because the slow stochastic study is just locked into a bullish mode. It hasn't come out of that mode since December. You heard what I just said, December. Even these breaks did not take it out of that mode. So the longer term picture still showing no signs that anything has ended. Now you get to the other markets and they do lose those signs. At the same time that the NASDAQ, the Dow had entered that powerful stochastic, and then it lost it in March with the correction that carried you back to the 18-week average. Again, the 18-week average was hit 3 weeks ago, and now you're back up again to new highs. This market non-stopping. Are we running into potential resistance points? Of course. The upper Bollinger Band is one at 21,312. Supports back at the 20,714 level. When you come to the E-mini, your momentum's back up and running, and carried it so strong, it carried it back to the upper Bollinger Band. You hadn't seen that level since back at the beginning of March. So there's no weakness in this. Today's jobless data certainly laid the pavement, because the market's saying, you know, the Fed's going to raise in June, and if you look at the Fed Watch page on the CME site, 80-some-odd% probability of it still. But after that, if this data that we're getting, this regular economic data, doesn't pick up, September becomes very questionable. December already has poor ratings for that. Could this just be one more and the market waits? It's too soon to know, way too soon. But you've certainly got that thinking going in place. In the Russell, this was an important week in the Russell. Once you crossed last week's highs, and that just happened, the market just soared right up to the upper Bollinger Band again. Went through it today, and you're going to finish slightly under it. So as you shot up and over it, you came right back under it. But look at how this is going. Is this a base or a top? I don't know. Momentum is up. The market's over the 18-day average. The swing line is up. Everything is bullish, but you're at that resistance point. And Bollinger tops work on weekly charts just like they do on daily. I have different rules for slow stochastics, but they are pointing up too. So there's nothing bearish right here. In the VIX, today's low at 958 took out the most recent low of 972, and we did close poorly. So now you've got a market that's got a rally, and now it's pulling back down. So I can either have this number point down from there, or because of the outside day up. I'm in a dilemma there. I'm thinking I'm going to put it up here and have them both point down because of today's low close and the momentum just pointing down. So this market is confirming what the stock market is doing, is another way to say it. We then get to the 10-year note. Momentum is up. The pattern on the swing line with these arrows, higher lows, higher highs. The stymie for it, that's the upper Bollinger Band. The trend is up because you're also over the bias, because you're over the 18-week average of closes. If the market can get through here, 128, the next target. You know, each time you're taking this as that way, you're taking now the 10-year notes to what, 216 on interest rates, and you're going to carry down towards the 2% range again. Market is saying that they don't have an appetite for this market. The market is a risk-on market in the stock market. That's what's going on at this point. In the dollar index, bearish, 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 all the way through. Lower highs, lower lows. It gets back and over the either side of that Bollinger Band, and momentum pointing down. Yeah, it's going to get ahead of itself at some point because it's getting under that Bollinger Band a lot, but you can go 5 to 7 weeks like that. So let's see what happens. It is certainly not a new sell under lower Bollinger Bands. I know people have a hard time getting and understanding that, but had you bought it here, you were right momentarily, but then bang, you get the correction. On the correction, do you have the stomach to stay for that? Or would you have been better off waiting to buy under the Bollinger Band? And you can just see you had a better time of it. Well, it's the same in selling it short, and that's all that I'm pointing out. I'm not telling you how to trade. In the euro currency, like the dollar, it's the flip-flop. Momentum still pointing up. The market today, big outside week up. So now I've got something that I'm excited about. I don't want to see this market take out 111.20. If it did, it would signal that this is now a bull trap, and at the minimum, I'd look for the 100-day average, and then potentially the 18 is a possibility. But it would signal a correction. So that's exciting to me. But to get there, you've got to break this market 168 points. That's not going to be an easy task, I can tell you. So all the bullishness remains in this market. in the British pound. Here's my question to everybody. Why do you want to gamble on the British election? Even if you know who wins, what about how many seats they win by? Is that a real majority that they need? I mean, it's too confusing. So I think smart money is just staying away until their election runs its course, and that's the 8th of the month. In the Canadian dollar, for the moment, the trend is lower highs, lower lows, bearish. The resistance shows itself at the 18-week average. However, there's a divergence here because momentum is pointing up. So if the market can get up and over last week's high of specifically 74.72 and close over the 18-week average, well, that might give traders a thought process that, hey, this market's even going to be able to rally against the dollar. Japanese yen, you have a pattern of lower highs, lower lows, but you've stayed over the 18-week average and the 100-day. You have a neutral market. You've got the swing line down, bias up, and momentum fairly flat, trying to point higher. Crude oil, still in the throes of bearishness. Now, not a lot of new bearishness, and I also want to point out the importance of the 100-week moving average in green at 45.28 and the lower Bollinger Band at 45.62. So as the market falls back there, as I said, on, I think it was Fox this week when Liz Clayman was interviewing me, I think the $45 range, 45.5, is probably a bottom area at this point in time. And I based it on that, to be honest. And if the market rallies, I don't see it much over the $50 mark, upper Bollinger Band, which would carry Brent to maybe 52. Just that's where I'm coming up with some of the things that I'm saying. In the nat gas, you have a market that doesn't know what to do. You've got a pattern of a higher high and lower low, so we're not trending on the swing line. You have downside bias because you're under the 18-day average, and momentum is certainly pointing down at this point, and it's an overbought condition. You need to get the summer weather for the demand to come in. So let's talk about my recommendation, and it's so important to you. You know, every morning at 8:30, I sit down at my computer, and I'm not going to be here, by the way, this Monday. So I don't know if it's saying everyone, I don't know. I'll try to do it from wherever I'm at this Monday. But to make a long story short, I sit down and I review 40 charts at a minimum each Monday morning at 8:30. And I throw out to you, I'm going to say, I think the pros are buying here. This is where they're going to put a stop. They're going to try to come in this way. It could be based on moving averages, pivot point analysis that I use. There's a lot of studies that I throw out. Then I'm also talking in the office, before I ever do this, with our research departments, getting a feel for what the fundamentals are, and I'm talking them in the report to you, giving you an idea of what we're seeing, everything updated. Think of it as a way that you start your day with a cup of coffee, and that's why I've got that right here. You're sitting there, and maybe it throws an idea at you that you had anyways, or you were on the cusp and you're looking and going, nah, now I don't want to take that. I like what he's done, or no, I think he's wrong, and here's why, so I am going to go with this, my own idea. That's the idea, to get you thinking. And then I write about it. So in the morning at 11:30, I send out a written update, and I'm covering all the events that have happened in the morning and what I think might affect the afternoon trade. And then at night at 8 p.m., I'm giving you a synopsis of what happened in the markets and the reports coming out in the morning and what the trade is looking for. So I'm giving you more ideas. If you got a phone, I even put out an oral recording. It's a lot of research that I do. If you haven't had access, I want to give you 20 days free access. Under us, if you're on a website that says, click here for Ira's free offers, click that. If you're watching me right now on YouTube, click this icon if you want. You can get there. If you've had the 20-day access and you've been looking for the discount, how do you get in for that 30 days? And that's how it works, 30 days at a time. I've got it for you. Type in IRA20. So you go to our website at www.iraepstein.com. Go to Ira's Research. You'll see that on our page. Underneath it, subscribe. Become a subscriber. Type in IRA20 in the coupon area. You're going to get your first 30 days at a $20 discount. For some of you, that's half off. So take a good, hard look at it. I think you'll like what you see. And what do I have to say? I'm trying to give you ideas. Now, As for videos on Monday, they are definitely not going to happen. I'm going to try to do my subscriber video. I won't be in the office because I have a family member out of state that is having an operation and I have to be there. So I wish you all a great weekend. I will be keeping up with the market. I've got the computers with me and I do all that, but I'm just not going to have the luxury in my studio. Take care. I'll see you all Tuesday. Take care now.